To start off, Tom, on the gold price at 1120, your view from here. We've got the likes of Jeff Nichols, who's the CEO or the MD of American Precious Metals in New York, saying that $1,500 an ounce is on the cards in the near term. What do you make of that view?
It's certainly a very bullish projection in the short term. That's a very high projection indeed. At the moment we're seeing a lack of direction really in the gold market for the last few weeks, while the price has really been driven by factors on the dollar and the euro. Obviously Eurozone concerns weakening the euro significantly, and the dollar, strengthening over the last few days and weeks has really actually put a lot of pressure on the gold price. So it's quite a big call to suggest that 1500 will occur in the very near term. However, we are quite friendly to the metal. We see a lot of pressures around, certainly, the interest from central banks to be purchasing gold at this point in time. And we look to, obviously, the Far East and China, a lot of speculation in the market about the Chinese, obviously increasing their own reserves of gold. And a couple of months ago, probably back in November, when we saw a significant increase in India's gold reserve from buying from the IMF. The word on the street at that point was, are the Chinese going to be next? And certainly a major scale buying program like that could certainly help the gold price, certainly.
Where do you see gold
for the time being, certainly around these levels, I think that when we look to dip below these levels, there are a number of buyers waiting in the wings. We see a lot of interest from real money coming back into the market. And the really fascinating thing about gold over the last few weeks has really been the strong positive correlation we've seen with the equity markets. Now, this is something you don't normally see in the gold market. Normally, gold is very much negatively correlated with the equity markets because, as people, fly to the gold market in tough times for the equities. But what we're seeing at the moment is as the equities rally, the gold rallies with it. And so I do think that there has been a change in the characteristics for buying patterns for gold, and it does look very positive at the moment.
Tom, I'd like to pose a question to you. At this time of year, what is of great interest to South African investors is the negotiations that are currently taking place for iron ore and coal. And on the iron ore side, we've seen provisional whisper numbers of 60% higher. On the coking coal side, we've seen prices allegedly at $180. What's your sense? Are these sort of price levels achievable in the first instance, and will they be sustainable?
I certainly think the iron ore landscape is definitely changing. We've seen with the creation of now a financial market for iron ore, a number of the producers and the major producers who really are dominant in this sector, especially for seaborne iron ore into China, a lot of them looking now at selling their iron ore basis a spot market price as opposed to going through the contracting process on a benchmark basis, on the annual benchmarking. So as the market kind of trends towards a spot market basis, we do see new participants and new entrants into the market, and I think that is positive for prices. So we do believe that this is a new territory for investment even, and so the increasing demand out of China specifically, and the amount of metal, something like 50% of seaborne iron ore is imported into China. So as the Chinese continue to show fantastic growth numbers, we think that seaborne iron ore numbers are certainly very bullish.
Staying with base metals and certainly with the China story, let's look at copper and the fact that in 2008 the highs hit $8,000 a ton, and then we were impacted by the financial crisis. We came back to $2,770 a ton. We are looking relatively toppish on copper prices at the moment, above that $7,000 a ton level. Could we see similar movements in terms of the pattern that was established 2008?
Yeah, I definitely think a lot of lessons have been learned about what the potential for the copper price could be, certainly in the short term. We've seen recently overnight fantastic numbers from China, really surprising everybody with Chinese imports for February. January, were relatively strong, and we thought that February would be weaker basis Chinese New Year and a downturn in demand for Chinese imports of copper. But in actual fact, the numbers showed a good 10% month-on-month growth. And therefore, we do have to question, the level of tightness that people are really expecting in the physical copper markets. At the moment, stocks are still building in both regions, but really, with the very bad news, the earthquake down in Chile, that has brought about some significant fears for short-term tightness in the copper price. And at $7,500 a ton on the 3-month contract in London here, we certainly recognise that there is potential for it to go higher. And the big question is, how will the major producers react to the price increasing significantly above these levels. First time round, we saw a significant amount of forward hedging of that metal. You know, the question is, will the market see that level of selling again as we head up towards 8,000? Will they let the price run up to $9,000 or even $10,000 a ton?
Simon, yesterday we saw JPO Morgan upgrading Anglo Platinum from its initial target price of 960 Rand to 995 Rand. And this is in light of many market commentators saying that platinum stocks are looking very expensive and that they're discounting a platinum price of $1,700 an ounce.
Yeah, I think if one looks at the target prices for both implats and plats across sell-side analysts, there's a massive range. And for implants, for instance, we've seen some as high as 320 Rand. And clearly there are clever people at the other end of these spreadsheets, but it all boils down to two parameters that you need to plug in, and that's your platinum price forecast and your Rand dollar forecast. So I'm assuming when we're seeing these very high forecasts for target prices for both implats, it's based on a significantly weaker Rand and also a much higher platinum price.
Well, let's come to forecasts, Tom, on the platinum price. We're currently trading just above that $1,600 an ounce level. Where to from here? We have seen an additional or an upper base established as a result of that additional investment demand coming online when we saw the ETFs being launched in the US.
Yeah, we're certainly very bullish on that story. We really believe that the ETF story is going to transform the landscape for platinum and palladium. I mean, they are very, very small markets in comparison to the other precious metals like gold and silver. And overall, the entrance of a new participant in that market has big consequences. We do believe that, coupled with the expectation for use of platinum, palladium in light vehicles in China, we certainly think that the landscape is going to be changed dramatically on the demand side, and very, very positive for prices indeed. We're sort of forecasting challenging up to 1,700 probably by the end of the year, I suspect.
We're also fairly bullish on platinum, on the platinum price going forward, and I think one of the major things and one of the defining trends we're going to see over the next decade is consumer demand picking up considerably from China and India. And if one drills that down into demand for automobiles, currently in the States, per 1,000 people there are 800 cars. In Europe that number goes down to 600, but in China there's only 20 cars per 1,000 people. So we see that number increasing significantly, and on the back of that we'll get a higher platinum price.
Tom, just before we let you go, we had Sasol out with the results here in South Africa yesterday. Headline earnings per share down 51%. The CEO of Pat Davies is saying that he's expecting the oil price to trade between $70 a barrel and $90 a barrel in the short to medium term. He was very bullish on oil longer term. He didn't give a target price. I'd just like you to share your views on oil.
Certainly, I think I wouldn't disagree with that range for the short term. I certainly think that there's a significant production to come to the oil market, which I think is unanticipated by many analysts. So therefore, by prices in excess of $90 a barrel, probably a little bit excessive at this point in time.